So this thing may actually get down on the 4-hour chart. This move may get down to this point. So get down to this point, comes down. After that, we have a push up to this point. So this is actually pullback. Now, if you grab a few retracement level, we discover that this point will always fall within between 31 and 61.8. Sorry, 38 and 61.8. So this is actually the point. So we're expecting this move down up to this point. If we get confirmation too on the 1-day chart, on the 4-hour chart, then fine, we know it has to go up. And that is how we are expecting this move. So wait, the next candle may come down. If we get a trigger here, then fine, we buy and it goes up. So that is it for Bitcoin USD. Then let's check the pairs that we analyzed the other day, Euro USD. We have Euro USD. Okay, this is Euro USD. And on this Euro USD, I was expecting something. I deleted the chart, I deleted the analysis I did, but this is what actually I did. And I was expecting a move down. So I do a line here. I do a line here. So this was the line that I drew. I drew this line and I was expecting a break. Since there was a break, I was expecting a retest. After the retest, it goes back up. But when I expanded this chart, because this move was already gone, the first move, it was already gone. So when I expanded the chart, I said, since this thing, we had the first move, it came down, we tested, went back up, but it did not go for long. So it went back up, but did not go for long. So what are we expecting back? We are expecting a retest on this structure before it goes up. But after that move down, so if you actually sold, you would have sold down to this point. But after this move, there was a long candle down. And I hope you guys know why we had that candle. There was this thing, there was a Euro news at 1:30. And when that Euro news came, it actually pushed this market from this point down to this point. And after that, look at what happened yesterday. There was correction, meaning the analysis we did was perfect. Because if the analysis was not perfect, then this move would have, since this structure was broken, would have come back, ended on this point. I see a move down. So it have been tested this point, I see it down. But since the analysis was good, the analysis was right, but the market was pushed by fundamentals, then this is a move now. So this thing is up there, and this may be a pullback. After the pullback, then it goes up again. But let's move to the 1 day and the 1 week time frame to actually get a clear direction. Okay, this is a 1 day chart. And on this 1 day chart, look at the structure. If you expand this chart, this structure is forming something like a W shape. And after this, what are we expecting? We're expecting this move up to this point. I look at this candle. The buy candle yesterday was too long. So market structure, this buy candle cannot just be like this and you see a reversal. It is practically impossible. So what are we expecting? We're expecting a small move up. We're expecting a move up to this is a first structure. This is a structure. So we're expecting this move up to this structure on the 1 day chart. Now, if we get to the 1 week chart, what are we expecting to? 1 week. Network is not really the best, so we just need to bear with. You need to bear with me. It is really slow these days. Okay, this is the 1 week chart, and I remember what I said about this thing. This part here, this is actually forming a base. This thing is forming a base within this structure. So this was a drop. After the drop, we had a base. And if you look at this thing, this is a structure. This is a double top. Now, a special kind of double top, if you look at this point here, this one here is lower than this one, indicating the direction. So we were expecting this thing to end on this neckline. This is a neckline, but I always explain, I always tell you about market maker method. So this is actually a market maker method, and it's forming a kind of range on the 1 week chart. And this range is a demand. This is a demand zone. There was a drop, and this is another one. So this is from a demand zone, and after that, what do we expect? We may expect another drop. If there is no drop, then we may expect a rally up to this point. So we need to be careful. And this candle, the last candle ends with high rejection. So this candle may actually go up to this point and ends with a high rejection too. In essence, the 1 week time frame is giving the same direction. The 1 day time frame is giving the same direction. So if we move to the 4-hour chart, what should we do? We look for buy opportunities only. If you see anything said, then it's risky, so you stay out of the market. Now, if we get back to that 4-hour chart, what kind of structure do we see? Okay, this is a 4-hour chart. So the 4-hour chart, look at the structure. Now, if you spot the structure on the 4-hour chart, how do you get in? Remember, the market has not opened, and you see this kind of move. Now, to get the exact point, because this is a structure, so the first condition is this thing may actually drop, may drop down to this structure. If it goes up, that is the first condition. The second condition is this thing may not reach this structure. So how do we trade this move now? To trade this move, or to get an estimation or get an estimate where the pullback is supposed to end, you grab your retracement level, take it up. This is a point. Then you see this is a 61.80, almost within that structure. Now you mark the points. This is a 61.8 level. This is a 61.8 level, and the 38. This is a 38 level. I hope I'm getting this thing correctly. 61.8 is a little bit down. Okay. Okay, so these are the two levels, and on these two levels now, you know this pullback may come down to this point. So if you get in now, you risk having a downdraft of maybe 30, 40 pips. So the safest way is to wait for it to come to this point, and within this structure, you see any confirmation, you see any structure, you see any reversal candle, then you get in and you know this is the end of that pullback. And if you get in at this point, then you know the target is here. So if you get in at this point, where we are stop loss B, where we are take profit B, we are actually buying the market. Let me just calculate the risk to reward ratio. This is for long position. So if you get in, let's say get in at this point, then your target should be up. That structure is too far up, so your target is supposed to be directly on it. So this is your target, and your stop loss is supposed to be here. Now, so the risk to reward ratio is 1:2. You see, 1:2.16. That is the risk to reward ratio. So it's a good trade. It's a good trade for you to get in. So that is it. Let's wait for this move down here. Please don't get in now, because look at this candle. The candle has no wick down even, and this candle just started, I think, 21 minutes ago. So probability is really high that will come down to this point. There is a rejection before it goes up. Now, when it comes to this point, since we already had the first rejection, this one may come deep inside. When it comes inside, you can move now to the 1-hour chart and get or spot a reversal candle. Because when this rejection starts on the 1-hour chart, it may form something like a bullish engulfing candle. So if you form something like a bullish engulfing candle, then fine, you get in before that candle even ends. the 4 hours candle ends, get in, and we buy up to this point. So that is it, and that's it for Euro USD. Now we had another pair, GBP USD. And GBP USD, we had the same problem. We had the same that news affected it seriously. And I have deleted the chart. I don't know. I deleted the chart, but let me just try to see it. Okay, if this is what I did, this is actually the move. Look at what happened. This is a 1 hour chart. Now this is a move from this point down to this point, and after that we're expecting a long move up. Or is it this one? No, this one. This is it. Now let me switch to the 4 hours so that we don't get confused, because I think that is the arrow is still there. So I think that is it. So on the 4 hours chart, look at this move. This move, we're expecting this thing down to this point, and after that it goes up. But look at what happened. It came down to this point, and this is a fib retracement level. So this is actually an M shape too. If you look at this thing carefully, this is an M shape. Let me change the color to this, then I change, increase this thing. So this is an M shape. Now this is an M shape. You have this first move, they have this one. So the other M shape, I was expecting this thing to end on the neckline. Remember, I checked the M shape to the neckline. I was expecting this thing to end on the neckline, and after that we may have a long move up, because the overall move was a buy. Now, but fundamental came, and look at the candle. This is a 4 hours candle. It pushed this thing very far down, and after that, what happened? There was immediate correction. So it went back up, then came down. So it caused a kind of equilibrium in the market. There was a kind of the strength of GBP and the strength of USD was somehow the same. That is why you have a long sell, and after that, another long buy. So in essence, there are times that you do your analysis or you place a trade and you see a move, you trade correction and it goes when there's fundamental. But there are times that if you trade correction, it does not go. So how do you know whether the correction will go, it will work or it will not work? Because you can see fundamental can actually push the market down, and after that you see another move immediately. Maybe after 1 hour or 2 hours, you see another move directly to this point. So some people, they get this move, and after that they trade the correction. Please, it is risky to trade correction. It is even safer for you to actually scalp this move down, but it is too risky to trade correction because you don't know the kind of move, you don't know whether correction occur. Now, most often we have things like FOMC, Federal Open Market Commission. We have GDP, gross domestic product. Then you have NFP, non-farm payroll. Then which one again? Federal Reserve. You have Federal Reserve. Those are news, and this means most of them, they don't respect this kind of move. I say most of them, but there are times that NFP respect. So NFP, you see a long move down, after that you see another move up. So it is risky to trade this kind of correction. Very, very risky. So if you spot the move and the move has already gone, you decide I want to trade news, you can scalp the news. Meaning if you get a direction is down, you place a trade, it goes a little, you close it, and you look for another opportunity. If you must trade those news, but do not trade correction, because most often correction may not occur. And if correction does not occur, then you buy. After this, you buy, you may see a very long sell candle. And this thing happened, I think, the other time with FOMC, because it was a very long candle, more than this one, even really, really long candle. And after that long candle, it was a sell candle. After that long candle, so people said, oh, trade a correction, but you'll be shocked that long candle. After that, another long candle, and that thing took about 1 day going down. Because this is actually an economic news. So the impact may be too high and it may go for days. So please be very careful when you're trading. First thing, when you get on your chart, when you start, before you trade, before you open a position, before you buy or you sell a position, a pair, check your Forex Factory. Go to forexfactory.com. You check, I know whether there's news or not. So that is the reason why this thing pushes market down. And after that, then we see the move is up here today. So since the move is up here, then this is more of a buy. This may actually go up to this point. If it breaks to this point, this is another target, and this is the arrow we drew. So it gives the confirmation. And another thing is, please, when you are trading, always check your chart. When you do your analysis, always check your chart. If the move goes towards a direction, fine. If it doesn't, then ask yourself, why did this move why this move did not go towards that direction? When you ask yourself those questions, then you always get answers. And because on that day, I think we're doubting, because I think Sonita was on the opinion that this thing is on the downside, and I was on the opinion that it will actually buy up. So this one has actually given us a clear confirmation that this thing will go up, because if this thing actually moved like that FOMC, it went down too much because it was towards the direction of our analysis. But this one, if this was towards this direction, then this thing would have maybe we tested this structure and you see the move down to this trend line. Remember, this is a trend line.
I want to expand it. There's no way. What is this?
So that is it. Somebody is talking. Is there any worry? Hello? Okay, so that is it. And today, what are we expecting? Now, if you look at this candle, the last candle here, this candle is not actually a reversal candle, but it is something like a kangaroo tail. If you look at this candle, let me just try to hide this thing. Look at this candle. This is actually a kangaroo tail. And you see the kind of rejection. First thing you see is this is forming something like a pullback. And after that, this candle. So what are we expecting? We're expecting a move up. Now, if you switch to maybe 1 day, let's get the confirmations on 1 day. If you switch to 1 day chart, what do you see on the 1 day chart? It is still the same. This is a long move. After that, this move down, and this candle actually is a Marubozu candle. These two even, we have this is double Marubozu candle, a buy and a sell Marubozu candle. So today, what are we expecting? Since this one gave the confirmation yesterday, then today we're expecting this move up. And I forgot to tell you people, I saw gap on Monday. I cannot remember the pair, but I saw gap. And when you spot, I always say, when you spot a gap, the market may be very funny that week. Volatility may be too high. So you need to trade with caution. If you don't trade with caution, you may blow your account. So that is a move. And the 1 day chart is actually showing this direction too. This thing may actually get up to this point. This is the point. If you move to the 4 hours, you see a structure here. You have a structure here before this next structure. Then the 1 week chart. 1 week chart is, let's get there. This is the 1 week chart, and the 1 week chart is forming something funny. And now, if you look at this thing carefully, this thing will actually form a head and shoulder pattern. So this move will actually get up to this point, then it will test this structure. Now, if you move to the 4 hours chart, you will see the structure. This is a first structure, and this structure has how many points? You have 1, 2, 3, 4, 5, 6, about 7 points, reversal points. That is why this is 8 even. This is another one. And that's why I say, if you draw this structure, if you understand market structure, candlestick mathematics, you draw this structure, this will touch 8 points on the 4 hours chart. And this one will touch 2 points. This is the first point, and this is another point. So this thing may get back to this point, it may get back and test these broken structures. It may get up to this point before you see it drops. So we are expecting this move up. After we get to this point, then we may see a move down, very powerful move down. And when it gets down, then this is the first target. We break to this target, then we have another target very far down here. So everything is boiling towards an upside. So on the 4 hours, it is perfect. It's a buy opportunity. But our advice, since we had a kangaroo tail here and some people consider this thing to be hammer, but me, I don't. Now, or advise you wait for this candle to close before you get in. If this candle closes as a buy candle, then wait for the next candle. This is a 4 hours candle. Wait for the next candle to go down. When it actually sells to a certain level, it may take 1 hour, it may take 30 minutes, it may take 2 hours. It sells down well, then you get in. And after that, you see rejection and it buys up. When it buys up, this is the first target, and the next target is very, very far up here. So that is it for GBP USD, and that is what we are up. So is there any question? Is there any question, any contribution?
Well, I don't have, sir. Don't have one.
Okay.
Maybe some other people do.
Okay, if there's no question, then we'll move to the next. Maybe just give a pair. If you have a pair, based on what we have been analyzing, if you have a pair, please just give, let's do it.
Yes, I came late. I didn't know that the class there was a last day this morning. I didn't.
But I told you guys now, I told you guys in the last school, I'll schedule the program in such a way that you should know on Monday or Wednesday or on Friday, because this week is just because of some guys they missed a class and I had to schedule a class with them. That's why we're having this confusion. But the whole this next week I'll come out with a program and I'll give you guys so that you know on Monday or on Tuesday or on Wednesday we have a class. I should not be informing you all the time. Okay, on this EURUSD, this is actually what we did. So we said it's on the upside, and this thing may actually buy up to this point. And we get the same explanation because we're expecting this thing in the last class, we're expecting it to move down to this point. Let me just explain this. We're expecting this move down to this point. So this was a move, it went up. So we're expecting it down to this structure and after that up again. But that fundamental pushed this thing. So this candle is because of the news. There were two powerful news on USD. I mean, two high impact news at the same time. So it pushes market down. And after that, this is a correction. Now, so what are we expecting today? This move is here. So I use my retracement level to draw this structure. When I do this structure, I said this thing may actually get down to this structure. It may get down to this structure. So let's wait for this move on this structure. If you get a reversal candle, if you get confirmation here, then we buy up. But I also caution the market has not opened. Remember, the market has not opened. And when the market opens, that is where there are always taps. So to be on the safe side, what should you do? This move, this candle, as it is buying and going, the candle has no wick, and this candle has taken 36 minutes. So you may be shocked that this candle will buy like this, and after some time, you see the candle very far down here. So wait for this move down here. It's really, really important. Wait for this move down here because this thing may take even 1 or 2 hours. It goes up. After that, you see a very long candle down before it goes back up. And if you just get in anyhow, then you know this move may be funny. It may be really, really funny. So you may go against you, maybe by, because this is a structure. We don't know whether we'll get very far inside or just touch. Everything goes down far inside, maybe to the 61, you'll go about 30 pips against you. So it is safe for you to actually wait because this pullback is really funny. This thing may actually get back down inside before it goes up. So that is it. And if we actually trade this move, if it gets down and we get confirmation down here, we get a reversal candle at this point, a strong reversal candle, then the risk to reward ratio is 2.16. So it's a very good opportunity for us to get in. if it actually goes down. But now it is risky. If it buys up now, no problem. But please do not get in when you're not too sure, because I'm not too sure that this will actually just continue going up. It is, I'm not really sure. So it is safe. It is safer for you to wait for that move. Now let's just check something on the 1-day chart. This is a 1-day chart. So the 1-day chart already has a week down. That's a week down. So it may go up, because if there was no week down, then there will be clear confirmation that this thing has to come down before it goes back up. So this thing has a week down, so it may just continue going up. But if it goes up, if you decide to trade, now this one depends on you. It does not depend on us. If you decide to trade, no, if you place a trade here, if you buy here, this thing may go back down before it actually goes up. So if you buy Euro USD, there should be expecting a move down. This thing may go against you maybe by 30, 35, or 40 before it goes towards a direction. If you can cope with that, fine, you get in. If you cannot cope with that, then fine, you leave it. And if you look at this thing here, if you buy at this point, the risk to reward ratio may be 1:1. Will you be able to cope with that kind of risk to reward ratio? If yes, fine, you get in. If not, then you stay out of the market. So that is actually what we had with this pair. Then the next pair, please, you have less than 10 minutes.
Fine.
Okay, USD JPY. So that we next will have enough time. We have enough time to analyze maybe all the pairs even, because now we are just rushing because I have to work with some people. Now, USD JPY, the first spot on this USD JPY, what can you see? This is a 1-day chart. There is a perfect trend line on the 1-day chart. I mean, perfect trend line. So this is actually a trend line. You see the lines were there, even I'm just repeating. This is a perfect trend line on the 1-day chart. This is another trend line. And you see how we draw trend lines. Drawing trend line is very, very important. It is a channel. It is not a line linking 2 points. Some people, they don't know how to draw trend lines. And when you draw the wrong trend line, then you have a wrong result. Now, some people take these 2 lines, link these 2 points, and they say it's trend line. This is not a trend line. Some people will use this, they link these 2 points, and they say it's a trend line. That is not a trend line. Another person will just get this point and they link. This is a trend line. This is not a trend line. Now, if you look at this move went up to this point. You see it has been going up, down, and at this point, it formed a kind of reversal. This is a reversal down to this point and back up to this point. This is a trend line. So this thing came back and retested this trend line. When a trend line is broken, there is always retest. My old student or my old traders, you understand this thing. There can be single candle retest or there are multiple candle retests. This is actually a multiple candle retest. And after that, what are we expecting? This is a move down. And this move down, look at this thing. This is a trigger. Look at how easy for us is. This is a trigger and the arrow is actually respected. This is a trigger. This is a bearish engulfing pattern. After this bearish engulfing pattern candle, what do we expect? We expect a move down. This is the first structure. This is the next structure. This is another structure. So if you want to get out, then we should start thinking, or we should think of this structure. Then this is another small one. So this is another structure. This is the first structure, second, third, fourth. So this can be take profit 1. This is take profit 2. Then this is 3. This is 4. So these are the different take profits that you can use. Now, caution, when you spot this move and this kind of, the trigger is always long, be careful the next day when you are trading. Because most often when this move is too long, then the next day you can actually see a buy candle. Because when the market, the sellers there were many sellers on the previous day. Then the next day, those sellers can actually take their profit and they leave the market. So you have a small buy before it goes down. So if you are selling today, you need to be careful. But this is a trigger. And with this trigger, this move has to go down. Trigger doesn't mean the move will go down immediately, but it means the move has to go down. So today you may have a buy candidate, tomorrow you see the next move down. So since we already know this thing is on the downside, if we move to the 1 hour, the 4 hour chart, what do we see? What do we need to check? You check for sell opportunities only. Meaning if this candle actually starts buying, you will not see a trigger on the 4 hour chart. So you stay safe, you stay out of the market. But if you see a trigger on the 4 hour chart, then it means this thing may actually get down. Now, if you get to the 1 day, the 1 week chart, let's just check the 1 week chart before we move to the 4 hours. I always like to do my analysis from 1 day, 1 week, and 4 hours. If you can do it on the 1 day and 1 week, and we'll start with 1 week, then 1 day, 4 hours, there's no big deal with that. So look at this move. This is a structure, the 1 week time frame. And this move up, then this one is down. If this candle actually ends this week as this kind of candle, a sell candle, maybe a very long sell candle down, if it ends maybe here, then next week this thing will move down. And on the 1 week time frame, where do we expect this move? This is actually the point. This is what people that have cash, people that have their money, this is how they trade. They don't know detail about these things. So if they give you good capital, trust me, the money you make, you'll be shocked. This is a 1 month chart. So when they do this analysis, they say, okay, this is a point. They just go and they say they just say and see them quiet. It may take maybe 6 months, you see them very far down. And if this thing takes 6 months from this point down to this point, how many pips? This is it, 6 months, it will give you 713 pips. So this will take maybe not up to 6, it may take 4 or 5 months or 3 months even, and it gives you 713 pips. Remember, this is USD JPY. USD JPY is too light, very light. So that's why if it was GBP, then this thing would have given you more than 4,000 or 5,000 pips even. So that is it. The 1 month chart confirming, then the 1 week chart. Look at the 1 week chart. There was a trigger last week. See how easy this thing is. I want you guys to understand this thing. There was a trigger last week on the 1 week chart. And this is what I always say. If you see a trigger, then this week, you know, this kind of end as a sell candle. And if this kind of ends as a sell candle, then what are you expecting? So the 1 month chart, the same thing. The 1 month chart, the last candle is on the structure. The 1 week chart, there was a trigger last week. Then the 1 day chart, there was a trigger yesterday. So on the 4 hour chart, get your entry and you sell with confidence. I mean confidence. So when you sell with confidence because this thing has to drop. But you must get the trigger, because if you just go in because I've seen all these things and you trade that way, then you may lose money too. Now, this is what is happening on the 4 hour chart. Look at this thing. The first thing, market structure, reducing candles. So since the candles are reducing, this is what I'm expecting. That is how we fit all these things. You have got everything on the higher time frame. So you just come now here. This thing may get up to this point. So the pullback may end here. When it ends here, then you get in and it goes down. It is simple. Analysis made easy. Very, very easy. So you wait for the pullback, because if you get in now, this will go against you maybe up to this point. Since this is a structure, so you wait for the pullback gets to this point. After that, you see a trigger, when you spot that trigger, you say, I will say, you can keep it far down here. So this will be the first take profit, then the next take profit will be very far down if you decide to leave it for some time. So that is it for the analysis, and I think everything is okay. So that is it. Any worry?
So please, concerning your USD, I didn't really understand when you came to the 1 day chart. You said that candle can actually go down and into the structure. And
Please
so
let me just restart. We have less than 1 minute. Let me restart the class, please.
Okay, sir.